So Gap has definitely gapped up after earnings as we predicted on August 24. Not only once, but twice, 3 times as of today, August 29, when we made the video on August 24 before earnings. So you can see here from that time we made the video, it is now up 16% on the stock. Now, if we take a look at our options strategy that we used to trade the earnings, we'll review that if you haven't watched that video. So these are the numbers. We originally went for a diagonal trade because this is not being traded anymore because the 11 strike calls expired on August 25. So that's why it's not being shown now on the chart here. If you recall, on August 25, this was this day, Gap did not break the 11 strike calls, which is up here, right? So we were able to keep the full credit of that call that we sold. So that's about $14. If you haven't watched that video, so you can review all these numbers, we'll put a link at the top so you can watch that video again. The video was titled Why Gap Will Gap Up After Earnings. Okay, so again, what we can tell though from the 10 strike calls though, because we had a 10 strike call for the September 15th, this is not expired. The August 25's expired, but this one is now worth about $116. We could sell that right now, when back on August 24, when we got into the trade, they were worth $62 each. So that's close to 100% already. So if we take a look at the current profit, it is at $56. You could see here it is, about 55, somewhere around there, $55 for each of these trades, right? So $55 of profit for each of these trades, plus the $14 that we got to keep from selling these August 25 calls. So you have to add that in. Okay, so $69 of profit per trade. We divide that now by our initial cost of $62. You can see here, multiply by 100 to get a percentage. We are at 111% profit. Okay, so this did take 3 days after earnings and 3 gap ups, because at every time it would gap up the next day. Okay, and so make sure to watch that video if you haven't, to learn how we predicted this and made more than 100% on these earnings. This is just earnings. Most of our profitable trades are actually not earnings, because those trades are a lot more predictable when it's not earnings. Earnings is a lot more risky for us to trade, but the fact that we can profit from earnings and make price predictions successively 3 days in a row tells you something about the power of using unusual options activity to predict stock price movement. Okay, so if you're interested in our other stock picks not during earnings that we share with our members, make sure to join our membership, where we have exclusive videos for our members whenever we detect unusual options that are valued more than $1 million from traders, investors that have done a lot of more research and have a lot more information to make stock price predictions. And we follow their trades, but using our own strategy, just like what we did with Gap on August 24, as we showed on that day. So make sure to watch this video. If you haven't, we'll put a link also at the end of this video so you can learn and understand how the strategy works. If you aren't profitable right now in this market, it's not your fault. You should be beating the market, but it's not your fault. It's a lot of the technical analyses and the fundamentals are missing the unusual analysis that we use as part of the strategy on how to pick the right stocks. And if you can incorporate it, just like what we did on August 24, then you'll be a lot more profitable. And if you pick the right trades as we share with our members, you'll also be very, very profitable. All right. Take care, everybody, and wish everybody to be as profitable as possible.